So, welcome to another live stream today for the first day of the week, and we have seen the markets again in green. The S&P 500 plus 0.7%, the Dow Jones almost 0.7% as well, and then Nasdaq 1%, the Russell 2000 0.86%. And everything seems to be green. Thank you very much for tuning in. As always, every single day just before the market closes, so we are switching in talking about the market. And today's episode is very important for me because I feel like this channel has also an obligation to educate. I made also a mistake in the past, so obviously I want to that you save those dollars to not make those mistakes. And we are talking about timing the market. So a very, very oft asked question just recently, not only here in the community, by people in the comment section, by people in the memberships, by my friends and family, and people are asking, should I buy now? The stock market is almost up where it was. Is it now the best time to buy? And so on and so forth. So we will go into that, and this will be one of maybe the best episode for the live streams because I'm super happy to explain it in such a simple way that even myself can understand it. Okay. Then we want to start with the statement the market is almost there where it was. So first of all, we need to understand when the people are referring to the market, they are meaning the S&P 500 or the Dow Jones. Now let's talk about the S&P 500. Well, the S&P 500 is actually not the overall economy, right? The most of the S&P valuation is of the best businesses in the US. So this is, for example, Amazon, Apple, Microsoft, all these big companies making a huge part of the S&P 500. And those companies are having all-time highs right now. So actually the S&P should be rather at all-time highs rather than below that. And this is not a reflection of the economy, guys. If there is no index or number of the economy out there, there is just the S&P or several stocks. And if you're looking into the stocks that are heavily affected by the health crisis, like Carnival Cruise or the airlines, they are still trading 50% or less or more since the all-time high. So don't fall into the agreement or statement that the market is almost there where it was. This is very important to understand. Secondly, I always believe if you have cash and want to invest in good business, the right timing to buy stocks is right now. And even, I mean, right now, I mean, while we're having this conversation right now, you should go out there and buy your favorite stock if you have the cash, because there is something that you need to understand. 2008 and 2009, when the bottom of the market started, about March 2009, there was something happening. There was the stimulus of the government directly getting into the market. It slowly picked up and moved the markets, and people was not sure, is this really the end? So obviously nobody could time the market bottom, and we see a very, very correlation also into that perspective. Lots and lots of stimulus coming here now into the market much faster than it was in the last financial crisis. So on the other side, you can see that maybe we are having now, maybe we passed already the bottom, the real bottom, obviously, mid of March. I don't think that we will receive those levels again. But maybe now is really a great opportunity to thrive the market, because long term, and this is what I always say, this is the most important strategy that you should write everywhere in each wall of your house or apartment to make sure that this is understood. Make sure to also let me know in the comments where you are watching from. This is super important and interesting for me. And let's directly dive into it. I want to talk about timing the market. So this is a very interesting topic because first of all, I want to show you a few memes that I found. So this is a typical Robinhood user right now, symbolized by this young man. I lost 13K this month. And then this guy said, you saved 3K in commissions. Thanks, Robinhood. I think this is quite interesting. I love memes, especially for the financial market. And then we have another meme that I found here. Maybe you know the space movie Interstellar, where they are visiting a planet. As you can see, they had already the SpaceX suit, right? And they are saying, 1 hour here is 7 years on Earth. And he say, good, we can huddle here. So I like this one as well. So I think this is super, super interesting to see that, people still having fun. Doesn't matter if they lose money, if they win money. I find that you should never really always lose your humor and positivity, however it goes for the market. Now let's dive directly into what we actually feel, guys. So I think this is a roller coaster of emotions. As you know, emotions you should leave out of the investing game, but unfortunately it's not what the reality is there, right? So I believe that this is such a interesting point. It's basically in the beginning we say, okay, we see a trend. I should watch this market. Then I wait any longer. I will not profit from the trend, so I buy. Then I will use this correction to increase my position. I buy. Wow, at this price I would double my position. I buy again, and then it goes further down. I can't believe the price has now halved. This must be absolute bottom. I buy again. And then why doesn't the banking association have anything to say about this? And then enough is enough. I should sell and never look at stocks again. And then you sell basically almost at the bottom. And then it goes even further down and you say, luckily I sold everything. And then it goes up and you say, it will still fall. And then it falls, and then you say, what did I say? And then it's going up. What is going on here? I knew all along that it would recover, and then you buy almost at the top again. Whatever, I will buy again. Anyway, it is cheaper than last time. So please don't make these mistakes, guys. Don't leave yourself for really, really these emotions. This is really hard, to understand. And even I did this mistakes, which cost me, 5 figures for sure. But this definitely experience is much better than, trading with much bigger numbers and then even losing more. So make sure to make mistakes early, and then we can actually be happy what the further future look like. So let's dive into the next one. And here's a very nice graphic why it doesn't work to time the market. The most important part why it doesn't work, because if you try to time the market, most probably you are losing on the winning days. And this is a very important part of this stream. The bad days, as you know, are happening from time to time, but the good days are the days where it goes maybe higher or half that high that it lost. And if you're missing those days, this looks very, very bad for your portfolio. As you can see, if you were over the 8,200 trading days invested the full time, you would make an annualized return on the S&P 500 from 1974 to 2007 of 13.4%. If you missed just the 20 best days, then you would just have 10% or 10.8%. If you then miss the best 30 days, 9.8%. And if you miss the 40 best days, then it would be just 8.7 and 7.8 if you miss the 50 best days. And then you would be almost at a treasury bills return of investment. So this is very important, guys. But the most thing, and this, this is something I really like. I will show you in a small story why it's not really worth to time the market. And this is the story of Tiffany, Brittany, and Sarah. By the way, they all have the same goal. They want to maximize their investment and they want to save every month $200. So basically we have, and they do this over 40 years, guys, okay? Let me see how, okay. So Tiffany and Brittany knew the market should be volatile, or could be volatile, and planned to avoid the crashes. So over 40 years, they try to avoid these crashes, right? Like so many try to do, no, I will wait for the next crash, or then I will buy, and so on. So Tiffany and Brittany knew the market would be volatile. So Tiffany basically had a very terrible timing, and she saved $200 per month, and she invested it when the market was at the top here. And nevertheless, that she put the money there and leave it for the long term, she made $663.594. Then we have the Brittany, okay, so this is just for explanation, guys. The names are actually by the type of investment. So Tiffany is the terrible Tiffany because she invested, we don't know, but she invested in the highest points. Then we have the Brittany who buys at the bottom, so Brittany bottom, right? And she really waited also, and waited for the perfect timing, missed the whole, we don't know how long, but missed a couple of years or months until the first crash. And then it turns out that she had the best timing and invested into the market's lows. So after her best timing, she made a very nice profit over 40 years with their $96,000 that she invested turned into almost $1 million, much better than the Tiffany, right? That really had a terrible timing. Then there is the slow and steady Sarah. She has absolutely no idea when the market crash or the market is at the bottom or at high. So she decided from day one she would just put every single month the money into the market. And what happens? She actually never looks at her account. She just automated invested $200 per month. And she is now worth, after 40 years and made out of $96,000, $1.386 million, guys. Okay, so as you can see, the best way, the absolutely best way, even better than timing the market at the perfect time, is to just invest every single month, guys. And this $200, for some people it's a lot of money. For some people say, I can put aside $2,000. If you put $2,000 every single month into the stock market on average for 40 years, then you will have $13 million, guys. And this is the most important part, guys. This is why I want to make this stream, because think long term, guys. Even when you think, when you are 20, okay, let's assume you are 20. If you are 20, then you think, wow, 10 years is a long time. In 10 years I will be 30. Do you know that at 30, and maybe for those that are already 30 or older will know, at 30 you don't feel 30, okay? You feel like 25 or 22. I'm 30 and I feel like the best form of my life, right? I really feel young. I feel more 20 than 30, and sometimes even 18. But then it's going from 30 to 40, and you are 30 and you're thinking like, wow, in 40, I want to have, everything established, everything I know. I want to prepare for retirement already. Man, at 40, you are still a baby, okay? You are still young. You are agile. You want to look what's there in your life. You will not ever, if you are 40 or older, you please confirm in the chat that you don't feel 40, and you would never thought at 20 or 30 that you will feel that young at 40. Same goes for 50. If you are going from 40 to 50, you think, wow, now I'm getting really old. But if when you are 50 and you're a little bit obviously maybe work out or whatsoever, but even not mentally, you are still young, guys. Okay, so then you are from 50 to 60, and if you can with 60 go to retirement with $13 million, guys, I think you could be a very happy companion. Okay, and guys, and the medicine goes further and further. So I also believe in technical advancement. So I believe for us today, we will live to 100 or 120 years easily, guys. Okay, easily, guys. So don't make the mistake and think, I need to make fast money. It's steady and consistent that will make you successful in life, that will make you rich, that make you successful investing into stocks. And this is the secret sauce, guys. Okay, so I think this was a super interesting thing, and this is not what I'm saying. If you take the best investors that I believe are out there, this is a very beautiful quote here. It's not the time in the market, guys. It's the time in the market, not timing that market. Let me read it again. It's time in the market, not timing the market that works. Okay, this was said by David Bach. Then there is one of the most important guy. I think he was one of the best investors out there, and he said once. This is Peter Lynch, had about 30, I think average 30% return in his hedge fund. And he said, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. This is quite a beautiful quote. So people really lost in the crashes themselves more than they are, waiting and losing the gains that are currently made on the markets. And on the other side, he said also, I found that when the market's going down and you buy funds wisely, at some point in the future, you will be happy, right? You won't get there by reading, now is the time to buy. So get your things together, guys. Invest into companies that you really like. Follow me on Instagram, Wolf of Dubai Danny, if you want to know a little bit, have a little bit more content behind the scenes. Sometimes I post things about my life. And thumb up this live stream if you like this topic. Timing the market is not possible, guys. And then you can see, even with the best possible timing, you can actually not make more than putting every single month the money into the account or index or portfolio, right? So I hope that this made a little bit more clearance, and whoever thinks that he need to time the market, send him this stream. I think it's a quite interesting thing. I see that let me see where you guys are watching from. So we have people from Portugal, we have people from Netherlands, California, New Jersey, we have people from Atlanta, Germany, US. Thank you very much for watching, guys. There is also so much happening into the markets today, which is not that much. I feel like, it started where the last week stopped, not very eventful. However, I think, and also our member QShootube from Seattle, Thank you very much for watching. As always, Slovenia, Dallas, Florida, California. Super interesting, guys. Thank you very much for watching. I hope you have a great rest of the day or evening. Tomorrow back with breaking news, with a vlog about Virgin Galactic and the usual long live stream. So prepare some questions if you want to ask them tomorrow. I'm looking forward to see you then. And like, up, subscribe if you're new, follow me on Instagram, everything combined. Thank you very much for watching. Thank you and goodbye.